Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Monday, May 12th, 2025. Happy birthday to Robschild. Today's episode begins with our headline, "The tariffs have teeth but won't use them for now." If you caught the headlines about what's going on with the talk between Trump and China, I guess the idea here is that we're going to reduce tariffs of things coming into the U.S. to only 30%, while things going to China are tariffed at 10% for now until their trade talks conclude after a 90-day pause still. So for now, because the market knows that the tariffs actually do have teeth but aren't going to use them for now, then it allowed stocks to go up. That's at least the way I'm looking at it. The Liberation Day announcement of the tariffs really worried people about, it was a pretty extreme ideas coming out, right? With the huge percentage of tariffs on China. We thought there would be, a battle royale that could potentially never end, and it already looks like they're agreeing just fine over these things, and that it's pretty obvious that they'll come to whatever agreements they'll come to in the near future. A headline that caught my eye today from CNBC right here, we have tariff receipts topped $16 billion in April, a record that helped cut the budget deficit. It's important, especially for people that are unaware, that the whole purpose of this tariff thing is to help with the fact that the U.S. has gotten into a situation where it has a little too much debt than it can sustainably continue to add to going into the future, especially with the current rate of inflation and rates. Now, if rates drop, like I keep saying on the show, then the total deficits don't matter as much. They become less burdensome. But, with all of this good news, I want to especially note that DXY, the dollar index, went up by 1.35% today. On Liberation Day, when the tariffs were first announced, right here where my mouse is, that's when the dollar really dropped, and then dropped even harder, and many people were saying it would continue to the downside. This was, in my mind, sort of a fear that the tariffs were going to do so much damage that they were going to just, blast the money printer on again, and the dollar would become, worth a lot less. It's going up right now. One way to interpret this, again, like I have mentioned before, what can drive the dollar higher is less fear over the U.S. in general. The dollar, stocks, bonds, everything. There's a number of charts to talk about today. We'll get there in a moment. First, community topics. What moves, if any, did you make today? Robschild sits on hand. Comment in the section below any moves that you made today. I'm very curious, especially with how crazy things were today. We also have coming up continuous tariff updates, as always. These seem to be the main driver of news and everything these days. And then tomorrow, Tuesday, we actually have CPI. Usually it's Wednesday, so they're putting it a day early. And then Thursday we have PPI and the initial continuing jobless claims, which I'm suspecting in my crystal ball we will start seeing these numbers rise soon. But it's really just a guess right now. Thank you for watching, subscribing, commenting, and supporting. Remember, the subscription button is over here, and it's Robschild's birthday, so the supporting information is right here, along with the same information in the description. Your support is greatly appreciated. Still no changes in the daily reminders or macro views. Click on my website in the description to read through my explanations of these things. And no changes to the Robschild crystal ball readings or portfolio. Moving on to the charts. We are up in the S&P 500 by 3.26%. Just absolutely gapping higher here. I really have no idea where we're headed from here. I can't tell if we'll go straight back down tomorrow, like in a turnaround Tuesday kind of a deal, or if this has the kind of momentum that will drive it higher. I could potentially see pretty easily a double top here if we do continue higher. That would make sense just from a chart pattern standpoint. And who knows, maybe we will see all-time new highs. Not many people are predicting all-time highs coming. One person through this whole period, another YouTuber that I watch sometimes, his name's Ron Walker. He has a YouTube channel. That's what he's been saying this whole time, that he sees new all-time highs coming soon. He might be right here. I really have no idea. My best guess is double top before we test some of this area that we were in before. We also had a pretty massive move in semiconductors, the SMH ETF going up 6.27% today. I mentioned last week, if in order for me to believe that the bull market is really on, one of the things I actually want to see is the Russell 2000, the IWM, break this pattern of lower highs and lower lows. I said I want to see a close above specifically this high, and I find it really interesting that that is the exact level that we hit today in the Russell 2000. So it provided some resistance to the upside. It will be really interesting to see what happens tomorrow. I had a feeling this week would be pretty exciting, and it has proven to be very exciting so far. The VIX, the pricing of options contracts, we are now finally below 20. We're out of the danger zone, according to the pricing of options contracts. The institutions are willing to sell these things for a little bit less. They see a little less volatility moving forward. And the VIX futures term structure is now finally out of backwardation, back into contango. These give a lot of legs to the market to potentially go higher. To add to the bull case, junk bond credit spreads tightened dramatically today. HYG, the fund, which is a decent proxy for this, went up by 1%. And then when you strip out the Treasury aspect of it, it actually went up higher. So we had Treasuries losing value at the same time as junk bonds gaining value. So, I mean, we're diving straight back into the, complacency mode here. I mean, we are back near all-time highs in this HYG divided by Chi, which means, say we get there, we're getting to like historic tightness in junk bond credit spreads, and this just screams complacency. You're just setting yourself up for failure if you're willing to take this much risk. I don't see junk bonds jumping up like this as a healthy move, but it does give some legs to the stock market and the risk on mentality. I mean, heck, maybe there is no risk in junk bonds and we should all just be buying junk bonds while they only yield something like 2.4% higher than the treasuries, but I don't know. TLT, my favorite place to be. I talked about for the past week or so at this point that it looks like we may be headed back down to this gap fill zone in TLT. And if you take a look at like the 30-year Treasury bond yield, we're getting back, we're getting close to that recent high. This differs from the 10-year yield. This one's a little closer to what TLT actually represents. Just a reminder, this thing is yielding a guaranteed 4.89% over the next 30 years. This is while the 10-year break-even inflation rate is only expecting a inflation rate to be only 2.29%. And so that yield is a guaranteed, by how things are priced right now anyway. That's a real yield on top of inflation. And we haven't seen that for a long time. So it still seems like a really attractive place. If it gets into my range, I'll be buying it tomorrow, actually. And I said in my Sunday night futures, I've been talking about getting more TMF. I already have a lot of TMF. And these leveraged funds, the longer you hold them, the more they bleed out. And, you don't get a real yield because you're not, they're derivatives. They're not actually holding the bond. So I might go a little more conservative at this point, especially with this being a risk-on environment. And, ZROZ is the fund I'll be looking for. It has the largest duration, and, it's not a derivative that can deteriorate over time. I also want to point out that the MOVE index, this is sort of like the VIX, but of bonds, is still in this dropping pattern. Yeah, it rose like a little bit today, but this is nothing to write home about. This isn't like bonds are going to collapse or shoot up or anything like that. This is just a up and down, up and down, up and down pattern. Like, it barely even noticed today. The MOVE index barely noticed what happened today. One thing that really caught my eye today was the 2-year Treasury yield sort of spiking up all the way to 4%. This is obviously has to do with the Fed funds. And for a while now, we have been pricing in 3 to 4 cuts throughout the end of 2025. And we are now looking at 1, 2 cuts throughout the end of the year. Only 2. So higher for longer. One market that is not believing things are so peachy is crude oil. Going up intraday all the way up to $63.60, but currently as I'm recording, back down to about $62. After this move up, it maybe could be counted as a topping tail. We're in the bottom 25% of the candle about, and that's usually a reversal signal. So it kind of looks like, to me, crude oil is going to go to the downside from here. I'm not really sure, but on days like these, it's always very important to check out what Dr. Copper, with a PhD in economics, is doing. Copper, believe it or not, dropped by 0.4% today. If this trade deal is so good for China and so good for the US, and the economy is going to be great from here, Dr. Copper would have a little bit more to say about this. Dr. Copper is saying, oh, you're going to pause the tariffs. Okay, well then I guess I'm not going to budge, because that's not really news to me. Don't mess with Dr. Copper, PhD in economics. Silver, also very unsure what to do with these very large tails on today's candle. This is today, yeah. With risk on in US stocks and the dollar moving higher, gold was able to drop by 2.72% today. Bitcoin certainly didn't act like a risk-on asset, actually dropping today. Maybe people just sort of seeing a little bit more attractiveness in stocks so they don't have to be in Bitcoin as much. Not really sure, but it's interesting. It went down by, let's see, is from a closing basis anyway, 1.57% today. We're at 102, around 102,500 right now. Chinese stocks also went up, specifically their K-Web fund, the Chinese internet company ETF, went up by 5.6% today. I mentioned the 10-year break-even inflation rate earlier in the show. It's pretty interesting over the week, overall of this news, that this goes completely flat. Didn't go up or down at all. Not worried about more inflation or disinflation, deflation. Last chart of the day, I'm not really sure what to think of it exactly, but the Skew index rose a pretty good amount today by 7.22% to 137.67. This measures how much people are buying option contracts that are like way out of the money. So this basically states how much people are willing to bet money that there will be extreme market movements going into the future. And when we scroll out on this chart, we're quite a bit higher than where we have been since the 90s, but since really 2023, this has become sort of a normal range. In 2020 as well. Before then, this was like a very high range, and so the market overall still expecting bigger movements than normal since pre 2017. Interestingly, I'm not sure exactly how to interpret this completely, but I'll also note that in December 2024, just a few months ago, we had gotten to a multi-decade high in the Skew index, and we have dropped down quite a bit from there. But this is, like I'm saying, for a historical standard, this is still fairly high. And that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.